Peace, power, and prosperity, family. This is Amir, the Chicago crypto hustler, Bitcoin block bully, coming to you once again, family. And what I'm going to be doing right now is the beginning of a series. It's going to be um, basic TA with the Bitcoin block bully, or the basics of TA with the Bitcoin block bully, something to that effect. Where I'm just going to be going you sort of the basics of technical analysis and reading the price charts, being candlesticks, trend lines, support, resistance, the simple, the very, very, very basics of it. And then we can get into more advanced or complicated, depending on how you look at it, methods of reading this and trying to figure out which way the price action goes. So with this beginning video, the first thing we're going to be looking at is what are candlesticks. And for anyone that's ever seen a price chart, then you'll know that this right here, the red and green bars, are what we call candlesticks. And specifically what they are representations of price action within a specific time frame. So what we're looking at right now is Bitcoin versus United States dollar, and we are looking at a 1 day price chart. That means each one of these candlesticks, be it red or green, represent a 24-hour period, of price action, be it going up or down, or the fluctuation within that 24 hours. Now, what you have coming poking out, let me blow this up. What you have coming poking out of some of these candlesticks are called, of course, what comes out of a candlestick. In fact, look at this candlestick right here from September 21st, 2018. It looks like a perfect candlestick that you would see sitting on your dresser with what? None other than a wick coming out of the top. So these are called wicks. And when explaining what a candlestick and candle wicks are, a candlestick is price action as it relates to a certain time frame. The body of the candlestick, which is a solid body, be it green or red, shaded or unshaded, red or white, black or white, is how high or how low the price action went. This is the opening. On green candlesticks, they open at the bottom, they close at the top. On red candlesticks, they open at the top and they close at the bottom. So with these representing 24 hours, basically the green candlestick is telling us that it opened at $6,493. And if you're wondering where I'm getting it at, when you place your cursor on each one of these candlesticks, it's going to give you a reading up here. It's going to show you the opening, the high, the low, and the close. So the O and the C, or the zero, the O and the C is the open and the close. This represents the body. This right here, O and C represents the body. Now, when you see the H and the L, the high and the low, that represents the candle wicks for the most part, unless your open and your close is exactly. You're open in your opening your low, or your opening your close, or closing low, high and close are the same. If you know what I'm trying to say, I might have said it a little bit mixed up, but this is usually your body, and these are usually your candle wicks. So when we're looking at September 21st, we can see that the opening is at $6,493.11. It closed after 24 hours at $6,750. Now, within that 24-hour period, that is what the candle wicks represent. It went as low as $6,492.50. So it only actually dropped 50 cents below the price that it opened at, but it went as high as $6,777. So we went about $27 higher than the price that it closed at. So we opened up down here, and after trading started, the the bears were able to push price action only 50 cents down below the price that it opened at. And the bears were trying to push it down, but the bulls deflected it. The bulls were able to push. Remember, think about it, if we opened up right here, that means the bulls were able to push price action from 6,400 all the way up to $6,700. Actually, we went as high as 67.77 before the bears were able to pull us down slightly. But for the most part, this candlestick alone is a representation of a bullish day. This is a very bullish day. And then come into today, what we're seeing form right now is a doji, if I'm not mistaken. Let's see. It may be a doji candlestick. And what you're going to start finding out is there are many different names to many of these candlesticks. We may go through one or two of them here. Yeah, so it is a doji. And it says alone, doji are neutral patterns that are also featured in a number of important patterns. A doji candlestick forms when a security's open and close are virtually equal for the given time period and generally signals a reversal pattern for technical analysis, meaning, excuse me, and what that means is that it shows indecisiveness within the market, meaning that the bears or the bulls are not winning one way or the other, and it's so almost like an even game. So once again, this is a bullish candlestick. This is a bearish candlestick. We call price action going into positive bulls because of the way that the animal strikes with its horns. It usually swipes down before thrusting up. So that is representative of a bull market or a bullish pattern or a bullish direction. Quite the opposite when you see price action going down, as represented right here. Hold on, let me show you. As represented right here, this is called bearish price action because the way that a bear strikes is it usually takes his paw and it swipes down. So that is where you get the whole bulls and the bears aspect of trading. So once again, these are candlesticks. Green candlesticks open at the bottom, close at the top. Red candlesticks open at the top, close at the bottom. Now, sometimes poking out of these candlesticks, what you will be able to see are lines or candle wicks, and what these represent are how high or how low price action went after the opening and before the closing, family. So, like I said, real simple. These are your candlesticks, and it definitely does matter what price time frame you're using when you're looking at them. The higher the time frame, meaning when you go from an hour on the way up all the way up to a day, by the time you've gotten to a day chart, those candlesticks are more so ruling as far as in which direction the trend is going. And we'll get into the whole swing of trends and which way a trend is, what is a trend, how to use trend lines a little bit further on in the videos. But if you see, I'm going to break these down from 24 hours into 4 hours. But now this is what I do want to show you. Let me show you something a little bit more complicated. In fact, let's look at Monero. We're going to look at Monero. No, where's Monero at? Real quick before I end this video. So I want to bring this back. I want to look at a week chart. There we go. So when we're looking at Monero, we're seeing that we came down from a huge downtrend before being corrected right now. So what we're doing is starting this correction and we're starting to come back and go towards the upside, whereas we will begin to go back towards the all-time highs that we were previously at. But what I want to show you is how when you go from a smaller time frame or a bigger time frame to a smaller time frame, where it will begin to show you more detail as far as what the candlestick did within the size of the bigger time frame. So right here we're looking at a week, and all you see is just one big candlestick. So you're like, okay, I mean, more so you can see that we are in an uptrend, but it has not been as simple as it looks right there. So when we go back out to a day chart, you can already see that we've got a little bit of volatility now. Now it's a lot more choppier than what you've seen. You see some swing highs, some swing lows, and then before coming back up to an extent and then swinging back down. If we open this up to a 4-hour chart, it's going to give us even more detail, meaning it's breaking each one of those candlesticks down into 4 separate parts. Excuse me, 6 separate parts. Excuse me, these what's the 4-hour candlestick? Yeah, 4-hour candlestick. So what it did, when you go back to a day chart, when you're going from a day to a 4-hour candlestick, correct? Blow this up. What we're doing is each one of these candlesticks, we're breaking this down into 4 candlesticks now. That's going to be 4 candlesticks. That's going to be 4 candlesticks. That's going to be 4 candlesticks. So let's break this down. Now we have had that candlestick broken down into 4. Now what we can do now is break each one of these candlesticks again in the half by going back 2 hours. Now this right here, this 4-hour was once a 4-hour candlestick, is now a 2-hour candlestick. And now we're going to split each one of these candlesticks in half once again and go back to an hour. Now you see how you see that? That was the 2 hour. Now we're going to put them all back together. 2 hour, 4 hour, 1 day, 1 week. See how that works? And we'll get into more advanced charting as far as using Fibonacci retracements, the Fibonacci fan, the upward swing of the trend line as you see right here. You will be able to you will know how to place this once you have watched these videos enough and practice on your own. But until the next video, family, this is the Mayor of Chicago Crypto Hustler. I hope this helped you in a more so understanding what candlesticks are and how to identify them. Until the next video, peace, power, and prosperity, family. I am out of here.